An emirate with barely any oil, built the most luxurious metropolis on earth using foreign bank money. Today, its tallest skyscraper bears the name of the man who saved it from bankruptcy. Welcome to Plexo. August 2001. Off Dubai's coast, turquoise Persian Gulf waters. A fleet of dredges started sucking sand from the seabed to build an artificial island shaped like a palm tree. Palm Jumeirah was the first major physical mirage of a place that decided to defy geography and financial math. While its neighbors in Abu Dhabi swam in crude, Dubai knew its oil would run out in decades. Survival demanded a radical reinvention. The strategy: transform into a playground for global billionaires, an absolute tax haven, and a planetary logistics hub. But to build the future, they needed unlimited credit. The whole world, dazzled by the desert's shine, opened their checkbooks. International banks poured in billions of dollars, assuming the government backed every corporate loan. The skyline filled with cranes erecting hotels with gold faucets and indoor ski slopes. Money flowed so fast that skyscrapers sold off-plan in hours, changing hands several times before the first brick was laid. It was a speculative fever, where the main product was sand. But all this opulence rested on a mountain of short-term debt. The global financial system didn't know it yet, but the timer was already ticking. The architect of this crystal utopia was Sheikh Mohammed bin Rashid Al Maktoum. Dark-eyed, always immaculate in his traditional white robe, and a passionate racehorse owner, the Sheikh ruled with a messianic vision. His philosophy was clear: build the biggest, fastest, and most luxurious. Under his rule, the emirate didn't operate like a country, but like a giant corporation, known in markets as Dubai Incorporated. The core of this machine was Dubai World, a state-owned conglomerate with tentacles in real estate, ports, and finance. Through its subsidiary Nakheel, the company behind the artificial islands, Dubai World issued bonds and took massive loans in New York and London. Foreign investors bought this debt with their eyes closed, assuming the sovereign wealth of the state would act as absolute collateral. Between 2003 and 2008, the population skyrocketed, attracting Western expats seeking tax-free salaries. The real estate market became a physical frenzy. Young bankers and developers signed million-dollar mortgage transfers on the hoods of their sports cars, reselling properties weeks later with stratospheric margins. The city expanded skyward, devouring capital at an unsustainable pace. Sheikh Mohammed inaugurated megaprojects weekly, projecting an image of invulnerability. But beneath this new Babylon, the emirate's total debt, plus its affiliated companies, was dangerously approaching $80 billion. What no one on London's trading floors wanted to admit was that no desert, no matter how shiny, could sustain that weight indefinitely. In late 2008, the collapse of Lehman Brothers froze global credit, and Dubai's financial oasis dried up in weeks. Foreign banks stopped lending, megaprojects ground to a halt, and property values plummeted. Suddenly, thousands of expats found themselves trapped in a terrifying legal nightmare. In the UAE, defaulting on a debt wasn't just a civil matter, it was a criminal offense punishable by prison. If a check bounced or a mortgage went unpaid, jail was automatic. Panic swept the city, triggering one of the most surreal scenes of the global crisis. In early 2009, the parking lot at Dubai International Airport turned into a luxury graveyard. More than 3,000 high-end cars, from gleaming Porsches to limited edition Ferraris, were abandoned at the terminals. Their owners, drowning in debt, had driven to the airport, left the keys in the ignition, and caught the first flight out to flee the country. Some vehicles had apology notes scrawled on the windshield, gradually covered by desert sand. It was the brutal image of collapse, millions of dollars in automotive engineering, rotting under the scorching sun while their owners escaped justice. The silent exodus emptied entire skyscrapers, leaving the state-owned conglomerate Dubai World staring into an abyss of maturities it could no longer refinance. And the worst was yet to come. On November 25, 2009, the Mirage officially shattered. Dubai's government issued a statement that shook global financial markets. Dubai World, the Emirates' crown jewel, was requesting a moratorium to delay payment on $26 billion in debt. The conglomerate, crushed by the real estate collapse, couldn't meet its immediate obligations. The reaction was absolute panic. Stock markets from Tokyo to London plunged, dragging down major European banks that had lent blindly. The financial world discovered, with horror, the fine print of the desert miracle. For years, investors believed lending to Dubai World was exactly like lending to the sovereign government. The authorities coldly declared that corporate debt was not guaranteed by the state. It was a masterstroke of financial cynicism. Traders' screens flashed red, reflecting fear of a massive contagion effect. Credit rating agencies immediately downgraded state-owned company debt to junk status. In London offices, executives shredded mountains of mortgage contracts stained by insolvency, booking catastrophic losses. The arrogance of the boom years turned into an accounting nightmare. Dubai, the city that promised to be the ultimate safe haven for global capital, was on the verge of the biggest debt default since Argentina's in 2001. The emirate needed an urgent bailout, and there was only one neighbor it could turn to. That neighbor would collect the favor in a way the whole world would see. Salvation came from the south, but it came at a staggering cost to pride. On December 14, 2009, Abu Dhabi, the rich and conservative neighbor sitting on vast oil reserves, threw a $10 billion lifeline. This last-minute bailout let Dubai World avoid an imminent default on a massive Islamic bond, temporarily calming global markets. But Abu Dhabi didn't hand over the money out of charity, it acted to protect the reputation of the United Arab Emirates as a whole. The humiliation for Sheikh Mohammed was absolute, and it played out before the entire world, just weeks later. On January 4, 2010, Dubai unveiled its greatest architectural triumph, the Burj Dubai, a 2,717-foot spire of glass and steel. During the lavish ceremony, with fireworks lighting up the desert, a historic change was revealed. In a gesture of financial submission, the tallest building on the planet was renamed the Burj Khalifa, in honor of Abu Dhabi's ruler, who signed the bailout check. The new name, projected onto the tower before millions of viewers, stood as a permanent reminder of who was really paying the bills. Dubai survived and restructured its debts, but its model of unlimited credit had shown lethal cracks. Dubai didn't just build a city on sand, it built the ultimate proof that infinite credit can sculpt an empire, but it can't by the pride of putting your own name on it.